Okay. Welcome back to Financial Accounting Info. In this video, we want to look at the preparation of the bank reconciliation statement. So we've got a question that we have here, that is a question 4 on that question paper. And the question reads, you are employed as a bookkeeper of Sunset Liquor Store. So on the required part, we are going to look at 4.2, which reads, prepare the bank reconciliation statement as at 31 May 2015. So we've got a note which reads, Sunset Liquor Store is a current bank account at Castle Bank. So this is the bank that we are going to analyze the bank statement. So before we answer the question, remember what we have on the bank statement should be reflected in the journals or the bank account in our ledger. So what we are saying is there are these two documents, that is the bank account in the ledger and the bank statement which is a document that is provided by the bank as a reflection of what is transpiring in our account as a business should have the same balances. So basically, we are saying what you are having on the debit side of the bank account in our ledger should appear on the credit side of the bank statements, and the opposite is true. That is, what is on the debit side of the bank statement should be on the credit side of the bank account in our ledger. So whenever there's a variance in terms of those two balances, in terms of the balance that we're having on the bank statement and the balance that we're having in the bank account in our ledger, there is need for us to prepare the bank reconciliation statement. So this is the situation that we have here. We are going to go through the question and try to identify the differences that prevail between the bank statement and the bank account in our ledger. Then we can now prepare our bank reconciliation, deducing from the variances that exist between the two documents. So this is what we have. We are given information whereby we're given the bank reconciliation statement is a 30 April 2015. So remember, this bank reconciliation statement is a 30 April 2015, which is for the previous month. Remember, the current month that we are going to prepare the bank reconciliation statement is May 2015. So we can proceed with our question to try to see what we have as the question progresses. So beneath now the bank reconciliation statement of the previous period, we would want to check the information that is beneath that. So we have got additional information that is there. So this is the additional information that we're going to base our preparation of the bank reconciliation statement. So we go there. You are supposed to go through everything there before you answer the question and try to understand it. So if you see that this is, you can see that this is what we have, then you can now go to, try to go to the next page and see what we have. You see, you're seeing a continuation of this additional information that you are having. So it's ranging from 2.1 going down to 2 points. We are seeing we have got 2.12 there. So 2.12 becomes the last item that we are having there. So we can now go to our bank reconciliation statements on the other section. So this is our bank reconciliation statement as a 31 May 2015 for Sunset Liquor Store. So obviously we need the balance at the beginning, which we can always get in the question there at the beginning of the question. So we can go there and try to find out what balance we have for the bank statement. So you see that that's where we are starting. This one is the bank reconciliation for the previous period. Then we go to item 1. We are on item 1. It reads a comparison of the April bank reconciliation statement with the bank statement received for May 2015. Review the following. The first one is saying the outstanding deposit appeared in the bank statement. So this statement, what it means is that we are having the outstanding deposit, which was the outstanding deposit for the previous period, and it's being said it now appeared in the recent bank statement. So in that case, we are saying if it's appearing on the recent bank statement, we are not going to make any adjustments, which means that is what we wanted it to be. So we are not going to make any adjustments. The issue of appearance on the recent bank statement is the correct procedure that we want. So we are not going to make any adjustments. So if you go to our previous bank reconciliation, you'll see that this outstanding deposit is the one that is being referred to. So they are saying it was outstanding for the previous period, but for the current period, it's now appearing on the bank statement. So it's not going to be an outstanding one for the current period. So we go to the next item, which is point number 2. It reads, following checks have not yet been presented on the bank for payment. We've got check number 608, check number 609, and check number 612. So what does it mean? It means that these checks were also not presented for the previous period, as they are appearing on the previous bank reconciliation statement. Remember, they are talking about check number 608, and also we have got 609, and also we have got 612. So these are the 3 checks that we are saying they are still not presented for the current period. So what we are saying is for the current period, they have to appear again on the bank reconciliation statement, since they haven't appeared yet on the bank reconciliation statement. So we can go there. We can go there and adjust for that. So we can go to the bank reconciliation statement and indicate those outstanding checks. Those are checks that has not yet been presented. So we come here. We also need to identify the opening balance. We haven't identified the opening balance that we need to put here, so we can maybe leave those outstanding checks and adjust them. But basically, we are saying we are going to indicate them on the bank reconciliation statement. So the next point is saying check number 599, which was issued on April 2050 to Jumbo traders as part payment of an account, must now be cancelled. This check got lost in the post. A new check will be issued in June 2015. So this check was lost. It means it didn't reach the bank. So we are not going to make any adjustments in the bank, but you will see that this transaction is going to affect the ledger, because it's already in the ledger, so it has to be cancelled in the ledger. So we are saying this one affects only the ledger, but bank reconciliation statement, you're not going to make any adjustments since it was lost. So this is what we have. Then we go to the next item, which is 2, which is saying a comparison of the cash book with the bank statement received for May 2050 revealed the following difference. The bank statement showed a favorable balance of 591,825 on 31 May 2015. So it means this is the opening balance that we are going to start with, and we are saying it's a favorable balance. And when it's a favorable, it means it's a credit balance. So this is the balance that we are looking for, that we're going to start with in the bank reconciliation statement, is credit balance as per bank statement. So we can go and put that one as our opening balance. So we are saying at the beginning, we have got a credit balance. We are saying credit balance as per bank statement. So at the amount that we have for credit balance as per bank statement is 591,000. Remember, we're saying credit, so we go to the credit side, 591,825. So after that, we can see there what we can enter. And then you'll see that after that one, we have 2.2, which is saying, did Duma settle the account by depositing a check for 5,500 directly to the current account of Sunset Liquor Store? So this one, it's a transaction that is appearing on the bank statement, but obviously it is a deposit that was made directly at the bank. So obviously in the ledger, they can only be able to pick it when they get out of the bank statement. So it's something that is going to that should be updated in the bank account in the ledger, and which means the bank statement is correct. So here is again a transaction that is going to affect our ledger, so we can just leave it and go to the next transaction, which is now the 2.3, which is saying an EFT was made into the firm's current account, 199,900, and basically revealed that it was the maturity of a fixed deposit at Castle Bank. So remember, this was an EFT. When an EFT is made, obviously it won't be reflect in the bank account in the ledger, but it will be appearing on the bank statement. So it means this one is also going to affect our ledger. It's not going to affect our bank reconciliation. So we go to the next one. The current account of the business was not yet credited with a deposit of 90,000, which was made on 31 May 2015. Remember, May is the month that we are preparing this bank reconciliation. So what it means is this deposit is not yet appearing on the bank statement, but we can now put it in the bank reconciliation since it's in the process of being processed. So we can now put it as an outstanding deposit. So we can go there and make that adjustment of 90,000 as an outstanding deposit. So here we are saying credit outstanding deposit. And the amount that we have is 90,000. Then after that, we can now be able to put our outstanding checks. Remember, we've got our outstanding checks that we identified here, 608, 609, and 612. So we are saying for 608, these amounts, we can only be able to find them in the previous month's bank reconciliation statement, whereby we are saying 608 here is 100,000, 609, 150,000, and 612, 20,000. So we can just say outstanding checks and then we list them. Then we go to our answer section. So here we are saying outstanding checks. So for outstanding checks, we are saying check number. We have got check number 608 with an amount of 608 with an amount of 100,000. Then we have got check number number 609 with an amount of 150,000. Then we have got a check number 612 with an amount of 20,000. So these are the three checks that we needed to put in the bank reconciliation statement. Then you can proceed with our adjustment, whereby we're going to additional information. Let's start to see. Right, we are on 2.5, which reads, we are here. It reads a credit entry of 18,000 on 19 May 2015 was in respect of a deposit that Sunrise Liquor Store made on their account, but it appeared on the business bank statement. So it means this was credited on the bank statement, 18,000, and it's not supposed to appear there as what is our explanation there is trying to reflect. So what we are saying is this is appearing on the credit side of the bank statement, so we should remove it by going to the debit side of the bank statement. So we are just saying we are going to debit deposit incorrectly credited. So it was incorrectly credited, so you have to remove it. So we go there on the answer section. So we are saying debit deposit incorrectly credited. So we are going to put it on the debit side, which is 18,000. And you can try to check on the next one. So on the next one, from 2.5, we are going to 2.6, which is saying the bank statement reflected the following items. Obviously, these items are items that appear on the bank statement, but obviously in the bank account in the ledger, they can only get to know about them when they get hold of the bank statement. So obviously all of them are going to be updated in the ledger. So we can just leave them and then go to the next one, 2.7. We are saying a debit order in favor of insurer brokers is for insurance of vehicles 8,800. So the moment we see that it's a debit order, it means it's something that is processed at the bank first, and then obviously the in the books of accounts in the ledger, they can only get to know them when they get out of the bank statement. So obviously this one again is a ledger. So we go to 2.8 RR use check of 1,250 in payment of the account had been retained by the bank manager and failed to draw insufficient funds. So when we received the check of 1,250, it was uh, updated in our books in the ledger. But when it reached the bank, it was rejected. So what does it mean? It means the bank didn't enter it. So there's no mistake in the bank. The only mistake that has to be corrected is in the ledger where it has to be removed. By removing it, remember when we issued it, we credited it in the bank statement as we are making a payment. Uh, this one is a RIOS check, RRUS check of 1,250 in payment of the account had been obtained by the bank. It means we are supposed to receive this 1,250, but it was rejected. So it's something that has to be corrected in the books. So the bank statement is not being affected there. So we are just having our ledger being the one that needs to be corrected. So we go to 2.9, check number 952, withdrawn by Sunrise Liquor Store out of their current account appears on the business bank statement, 2,750. So we can just try to go back, check number 952, withdrawn by Sunrise Liquor Store out of their current account appears on the business bank statement. So we've got 2,750, which is a check which was withdrawn from our bank account as all the business bank accounts. It's not supposed to have been processed. So it's a wrong entry of 2,750. So when it was entered on the debit side of the bank statement. So to remove it, we go to the credit side of the bank statement and we put our 2,750 on the credit side so that we remove the figure that is on the debit side. So this check number 9952. So we can just make a description of say credit check number 952 incorrectly debited. So this is what we have. We can just go there and try to adjust it as such. So we come here. So we are saying credit check number 952 incorrectly debited. And then the amount is what? 2,000. We are going to credit it. So we go to the credit side. So we are saying the amount is 2,750. Then we can always go back and try to see what we have next. Right, we have check number 2750 or 2.9, so we are going to 2.10. Check number 618 for 10,500 appeared in the casebook payments only. So this 10,500 is being said to be appearing on the casebook only. So it means also in the bank statement it should appear. So remember, it's a check that was uh, uh, issued. So it means it is on the credit side of the cash book. So it has to be on the debit side of the bank statement. So as simple as that. So I go to the debit side of the bank reconciliation and put our check number 618 is part of the outstanding checks. So we go there. So here it means we are supposed to put another check there, leave some space, then we put another check. So we're saying this is check number 618, and the amount that we have is 10,500. So this is what we have. So we go again to check what else do we have there. after check number 618. And then we got 2.11, which is saying check now issue the check number 699 during May 2015, dated 31 August 2015. It was liquor for purchase of stock 2,500 cigarettes. So obviously this is a post-dated check. So a post-dated check we have to put it in the bank reconciliation statement. So remember, it has a date of 31 August 2015. So we haven't reached the date of 31 August. So you're supposed also to put it in the bank reconciliation of 3,580 as part of the outstanding checks. So we've got check number 699 that we have to put again there. So remember, we were supposed to leave some space there, but unfortunately, a bank reconciliation, it didn't leave some space. So it means that when you reach the section of outstanding checks, you can leave some space so that whenever you find another check that is outstanding, you can edit here. So here we are saying check number 699. Check number 699 again, with an amount of 3,580 are supposed to be there. Then we go to check on the next adjustment. We are now on the last one, which is saying check number 629 was incorrectly entered in the credit side of the cash book as 35,700 instead of 33,700 rands is reflected on the bank statement. So this one on the bank statement is correct. That's what it means. So when it's correct on the bank statement, there's nothing that we're going to do on the bank statement because it's correct. And then the last statement is saying this check was issued to Vodacom Limited for the May 2015 subscriptions. So what is important is that the bank statement is correct, so we're not going to make any adjustment. So we are seeing that the error has been made in the cash book, so it has to be corrected in the ledger. So this is what we have. This is the final adjustment that we had. So we can just go there on the other section and try to balance our accounts. So if you come here, you will see that this is what we have. And then we can see now if we add the totals, we're supposed to add the totals of both the debit side and the credit side and see which total is greater to come in between the double lines. So it means if we come here now, we are trying to balance the account. We can always try to put our double lines. So we can leave a space here where we are going to put our balance. So you see, we can put our double lines. Whereby we're saying if we add the total of the debit and the credit, you'd see that the total for the debit side is going to be 302,080, and then the total of the credit side is going to be 684,575. So obviously the greater total is the credit side. So it's the one that is supposed to come in between the double lines, both sides. 684,575, 684,575. And then having done that, we now find the difference between the credit and debit, whereby I say 684,575 minus 302,080, and you're going to get a balance of 382,495. So this is the balancing figure, which is supposed to come where do we have the smaller total, which is the debit side. So it's going to come here is 382,495. So this is what we have. And then obviously we are going to make a description in terms of this. So remember, this one is a balance CD that we're having on the debit side. So balance BD will be on the credit side. So it's a credit balance. So it means on the bank account or the cash book, it will be on the opposite side, which is the debit side. So we are going to say debit the balance as per cash book. Debit balance as per cash book. So this is what we have. So this is the last calculation that we have in terms of the balance. So this is what we have, guys, according to this video. Those who have subscribed, please subscribe and say, let's meet again in the next video as we prepare for exams. As for this video, I'm out.